Unlocking the essentials, non-resident rental income tax rules in Canada. As a non-resident earning rental income from properties in Canada, understanding the tax requirements is essential to ensure compliance with the law and avoid any potential issues. Canada imposes specific tax obligations on non-residents who earn rental income within its borders, and being aware of these requirements can help individuals manage their finances effectively. In this article, we will delve into the intricacies of non-resident rental income tax in Canada, focusing on Section 216 tax and related aspects. The basics of non-resident rental income tax. When a non-resident earns rental income from Canadian properties, they are subject to taxation under Canadian law. The Canada Revenue Agency, CRA, requires non-residents to report their rental income and pay taxes on any earnings generated from renting out properties in Canada. This applies to both residential and commercial properties, and failure to comply with these regulations can result in penalties and legal consequences. Understanding Section 216 tax. One of the key provisions related to non-resident rental income tax in Canada is Section 216 of the Income Tax Act. This section outlines the rules and regulations that non-residents must follow when reporting rental income earned from Canadian properties. Under Section 216 tax, non-residents are required to file a Canadian tax return to report their rental income and pay any applicable taxes on that income. Calculating tax liability. Calculating tax liability for non-resident rental income in Canada involves several factors, including the amount of rental income earned, expenses related to the property, and any applicable deductions or credits. Non-residents are generally subject to a flat tax rate on their rental income unless a tax treaty between Canada and their home country specifies otherwise. It is essential for non-residents to keep detailed records of their rental income and expenses to accurately calculate their tax liability. Filing requirements for non-residents. Non-residents earning rental income in Canada are required to file a Canadian tax return by April 30th of the following year. They must report their rental income on Form NR4, which is used to declare income earned in Canada by non-residents. Additionally, non-residents must also file Form NR6 to claim a reduction or waiver of withholding tax on rental income. Failing to meet these filing requirements can lead to penalties and interest charges. Importance of compliance. Complying with non-resident rental income tax requirements in Canada is crucial for maintaining good standing with the CRA and avoiding legal consequences. By accurately reporting rental income and paying taxes on time, non-residents can ensure smooth operations and avoid any issues with tax authorities. Seeking professional advice and guidance on tax matters can help non-residents navigate the complexities of the Canadian tax system and stay compliant with the law. In conclusion, non-resident rental income tax requirements in Canada, particularly under Section 216 tax, are specific and require careful attention to detail. Understanding the obligations, calculating tax liability, and meeting filing requirements are essential steps for non-residents earning rental income in Canada. By staying informed and compliant with Canadian tax laws, non-residents can effectively manage their rental properties and fulfill their tax obligations in a responsible manner. Need help managing your non-resident rental taxes? Call 416-283-8774 or visit theaccountingandtax.com.